Hey everybody, it's Pete. Good morning. Welcome back. Today is Wednesday morning, January 6th, 2021. Thank you so much for being here with me today. I really appreciate it. Well, the elections are still kind of going on in Georgia right now. It looks like that one of them has been decided, and that's kind of thrown the market into a little bit of, I'm not going to say chaos, because that's a strong word, indecision, where we're seeing some selling. We're seeing back and forth price action. We'll take a look at the futures right now. You can see that it's what's the word I'm looking for? Chaos is really the right, I think that is the right word. When you see the chart, you're going to see we're bouncing back and forth over the last hour or so, but more importantly, we're actually down. And that's a big thing from yesterday's price action, because we had a lot of questions yesterday. One about bottom fishing, which is not a good idea under any circumstances, because you might do it right once. And when I say do it right, you might get lucky once and think that it's a good idea, specifically talking about FUBO and QS. And so really the question I want to bring it back to is a lot of people discussing the differences between short covering rallies versus fresh buying after a down move. And yesterday we were very clear in the boot camp to really be making the distinction between short covering, which means people are getting out of short positions, making the market go higher, versus new buying, fresh new positions making the market go higher. Now, short covering typically happens after a downtrend, but we did have that massive day of selling on Monday, which was a big day, a big red day, especially in the market. So yesterday was shorts from Monday getting out of their positions because there wasn't follow through to the downside. And we were very specific yesterday in the boot camp to say it's not enough one day. Nothing new happened. We're still inside the previous day's price action. We need today to prove whether or not that was short covering or bottom or people looking to start new positions at lower prices. And today we're going to get the answer to that. Now, it could be because of the election. It could be because of the Georgia election. It could be because of the pandemic. There's a lot of stuff going on right now. But all that's the reasons why. We don't trade the reasons why. We trade the price action. We trade what's actually happening. And then we build arguments. We set expectations. We say, this is the reason I'm accepting risk in exchange, because I have this unbelievable idea, because of the stop loss, because of the profit target, because of the order flow, because of the tape, because of the sector, the industry group, all of those reasons that go in, and I got the optimal entry. That's how you build an argument, not just running a scan pre-market and say, oh my gosh, the stock is up, I can't wait to buy it. That's not an argument. That's a weak argument that usually doesn't work. So what we're going to do now is we're going to build an argument. We're going to talk about some ideas. The biggest thing I want to get across right now is long-term thinking. Every day is not a day to get in there and be like, gosh, I just can't wait to trade heavy. I can't wait to make maximum on every trade. Some days are trading for cash flow. Some days you can get in there and size up and look for bigger positions and hold longer. Right now, because we're in a slightly bearish tone in the short term over the last couple of days, and if you're only looking long, we're zeroing in on a lot more stock specific stuff. It looked like the semiconductor stocks on Monday and part of Tuesday opened up right out of the gate, looked like they were going to follow through, but we're getting what a lot of people know as these topping tails, right? So we're not getting follow through. We actually had a really good trade yesterday in PSX in the boot camp, but we had a good buy stop, really good clean level, plenty of profit target between 72, 79, and 80. That was kind of like the short-term window for the trade. But what we're seeing is we're seeing a lot of stocks breaking out, giving us perfect entries, pulling back to break even, and then you kind of get frozen. Like, I just had 100, whatever. I'm just throwing a number out there, $450 on that trade. And it just came back down to nothing. And again, trader language is a flat. It pulled back and came to a flat. So a flat means in and out at the same price, right? Or a flat means you don't have any positions on it, just so you can sound good at a barbecue this weekend. But that's okay. It's more important that you're identifying good ideas. And if they don't follow through, that's on market conditions. That's not on you. If you're doing a good job of building that argument, doing a good job of the optimal entry, you're doing your part. Now, the next part is managing risk. And if that comes back to a flat, you have to be disciplined. You have to be focused. You have to, what we call hashtag trade like a pro in the boot camp, get out at the same price, reevaluate the idea. If it presents itself again, set an alert so that you know to get back into the position, which by the way is a big part of trading. You get out of that trade, it doesn't work out. If the idea is still valid, immediately get in there and set an alert so that you don't miss it. We actually had a day trade in NEO yesterday. The first trade took off a little bit, came back, took a flat on that one. I told everybody in the community, set an alert for this price. If it gets up to that price, we're going to start to look at it again. It matters. Got back up to that price, and the second trade was a winning trade. So again, these are the differences between chart reading and really getting in there and understanding how to make money. It's not just looking at patterns. It's not just having 5 monitors. It's really building the argument. So if you're a little frustrated with some of the follow through this week, that's more a function of the market. Be excited if you're on the right idea that just doesn't follow through. That's not on you. It's on you to manage risk and leverage. So what I'm doing right now is lowering my exposure right now because the follow through is just not clean. We're not like, bam, going up and following through. So that's a part of trading. So we're going to head over to the charts. We're going to take a look at starting out with the E-minis so you can see what I mean by the little bit of chaotic price action right now. And again, if you find these videos helpful, please do me a favor, click the subscribe. That would be awesome. And give me a thumbs up. I'd appreciate it. We're going to talk about a few stocks today. If you have any questions about any of the stocks in the video, definitely click down and leave me a comment. I'll be more than happy to get back to you. So let's head on over to the charts. We'll take a look at the ideas and how we plan to look at them today. So obviously here's the E-mini S&P futures. We closed right around here. This is around 4 o'clock yesterday. And here's what's going on. Obviously reacting to the Georgia election right now. And you can see that we're down around 14 points right now. So not liking the indecisiveness. That's the big thing. The market likes clarity. It doesn't like surprises. And right now there's still some stuff up in the air. Again, just sticking to the price action. That's what we're seeing. So we're going to open up with a little bit of selling out of the gate. First stock we want to talk about today is Roku. Roku actually had a price target upgrade to 414, which is a pretty big move higher. Looks like we're going to open up a little bit lower this morning. So you really, again, this is the difference between chasing price, chasing headlines, and reading the tape. When the tape tells us to get involved, we're going to get back involved, but that's a pretty good upgrade. And they're looking to start getting into their own content production. They're looking, I think the company's name is Quibi, if I'm not mistaken, to start bringing over their content. We'll see if Roku has in the cards also to start creating their own content. But as far as some stocks that showed solid relative strength, solid order flow just yesterday as the first piece of a new trade, JD matches that criteria. PDD is another one that actually punched through. So a really good, clean follow through after 2 days of selling, which was last week and yesterday. So now we're going to have some decisions. You have to make a decision on how strong do you feel the current order flow is in relation to the next trade you're going to put on, because you can see a lot of the stocks that we're calling out right now are trading lower with the market, which is super interesting. If it trades lower but you still want to be long, remember you're buying the fact that there's existing order flow and a good tape in a strong stock. So a lower opening some of these is not the worst thing in the world, but you need to read the tape intraday or short term to refine your entries. FANG, we had a breakout at 48 to 50, exploded through that level. 50 was the level. So here's the thing with FANG. If this was the profit target and now it's halfway to the profit target, you've diminished the amount of reward available on that trade. So you have to tighten up your risk parameters and probably lower your share size for the same target, because the risk is less, the risk is the same, but the reward potential has diminished. So you have to change your trade management. Again, difference between chart reading and being a tape reader and wanting to become a trader. You adjust these things as the market unfolds. You're not changing your strategy. You're adapting how you're applying it to different market conditions. Next, we have PXD, again, sticking with the energy idea, right? Nice clean breakthrough. 117.50 was the optimal entry there yesterday. Still looking for some follow through. Now, again, what do you want to see? What don't you want to see? You want to see well bid today. You want to see follow through. You want to see higher highs, higher lows, and a strong close to have some conviction in this idea. DuPont is an interesting one. It looks like a great breakout, right? I actually pulled this one up. One member of our community called this out a couple of days ago, maybe even last week, Brian. Really solid, clean follow through. But then you start to zoom out to a little bit longer time frame, and you can see you got some pretty decent resistance here. And again, what is resistance? It's the last time sellers, in this case, did something significant. And we're talking about for the period of around 6 months where they just wouldn't let it get through higher levels above 80, 84. So it could be a shorter term trade up to 80, maybe 82, 84. Not a ton of meat on that bone. It's still decent, but the better trade is 84 to 100. So you have a very defined profit opportunity here up to 84, maybe even 82.50. I think that's really the right number. but a better look through that level. But again, good call, Brian. That's the whole point of the community. Love everybody in our community. EXPE, again, sticking with the theme of what we need to see on a follow through. So we need to see the well-bid candlestick on the breakouts. Awesome. We need now follow through. What we don't want to see is a breakout and a fail. What we don't want to see is an inside candlestick. We want to see the smart money that pushed this into a breakout above 132 yesterday come back and support higher lows, support higher highs, and more importantly, close strong, which is what we did not see in that PSX trade yesterday. Financials, we talked about these. Citigroup, I'm just going to go through the charts, but then I'm going to make a distinction. Citigroup, Morgan Stanley, and obviously Goldman Sachs. These stocks have been a little bit frustrating. You can see on the daily charts, a lot of melted candles, a lot of back and forth. So easier reading these charts right now on the weekly chart. Just a little tip to switch your time frame when the daily chart's a little bit messy, but the direction is obvious. I want to finish up with Target. Target actually punched through, just barely got to that 182 level, 180, 197, if I'm not mistaken. So we have the alert set for today to watch it over 182 and then make a decision to look for a new entry. So look, we're not lacking volatility, but I'm trading for a little bit more cash flow right now. I'm really watching what the stocks normally do and more being a little bit of aggressive. We're scaling out of some positions into the normal profit targets. Instead of giving them some more room to run and letting profits pull back to breathe before they go up again. We're not seeing massive follow through across the board. You really got to be dialed in on your watch list, which means that watch list is super important in the morning. And for those of you that are new, the watch list is what we do in the game planning, and then you translate that into after the market opens and you choose which stocks match your personal criteria. So hopefully you'll have a great day of trading today. If you have any questions about these stocks, definitely leave a comment. I'd love to hear from you. Have a great day.